George, I'm going to start off with what effect this could have, these tariffs could have on China. Bloomberg Economics did a study, and what they've come up with as projections are basically, if it remains at a 10% rate, this additional $200 billion worth of imports taxed at a 10% rate, it'll have a half a percentage point effect on GDP growth in China. If it goes up to 25%, as is projected at the end of the year, Bloomberg Economics projects it'll go up to 0.9% on the GDP growth. Do those numbers make sense to you, and how concerned should President Xi be about this?
Yeah, I think those numbers do kind of resonate a bit, David. I mean, the issue for me is that I think for the moment, okay, even with the 10% tariff on the $200 billion, the impact on the Chinese economy is, it's a bit of a rounding error for me. And actually, in any event, it may already have been offset by the 7% depreciation of the yuan against the US dollar since the middle of the year, and the combination of easing measures in China, which have been undertaken by the government and by the People's Bank of China for other reasons to do with the domestic economy and the consequences of the financial clampdown. But I think your Bloomberg citation about bigger damage to the economy the longer the trade war goes on and the higher the tariffs go, I think I sympathize with that, and I think I could see that happening, because I think one of the important things that we have to watch for, of course, is whether the Chinese retaliate, which they said they're going to, whether then President Trump decides to expand the tariffs to the whole of the imports of America from China, which he said he would, and actually how the Chinese retaliate, because if they start threatening the supply chains and products of American companies, then this will have domestic consequences too.
Well, and yet, is it more likely they might do something like that, interrupt the supply chains of U.S. companies, rather than the easing measures you described? Because those easing measures come with a price tag. After all, President Xi was saying he wanted to move toward deleveraging, and if he has to re-leverage in order to make up for the tariffs, does that put pressure on him and his regime?
Yes, I think it does. In fact, my view is I think President Xi has been wrong-footed by President Trump's resolve to prosecute this trade. I was going to say spat, but it's more than a spat. It really is a bit of a trade war. And so I think the Xi Jinping regime has been wrong-footed by this. I think it's reflected slightly badly on him, actually, because we have started to hear some criticism during the summer from unexpected quarters about his leadership style and characteristics. And of course, to the extent that the government is kind of under pressure to kind of relax its stance on deleveraging, it really complicates what they set out to be one of their core objectives, which was financial stability and the clampdown on risk taking. So this trade war is coming at a very unpropitious time for Xi Jinping.
George, what sectors in China are most vulnerable right now?
Well, I think, at the moment, the trade, certainly the I know this is not what you're asking me, but I'm going to get around to answering your question. The external sector in China, so the foreign trade sector, is at the margin. It's a bit of a drag on the economy, the whole of the external sector, which of course encompasses lots of things like consumer goods and intermediate goods and finished goods. And I don't even think that the tariffs are having that much of an impact on that sector at the moment. And it's having some impact. But, China has kind of registered a small balance of payments deficit in the first half of this year, which is rather unusual. I don't think this necessarily reflects a huge change in the kind of imbalances within China. But I think it's certainly to do with changes in the structure of trade and trade policy. So, what would worry me, I think, about sectors really is if China starts to target American companies, which I think is something we might expect, because in past political disputes with countries like Japan, South Korea, the Philippines, and Vietnam, they did target the companies of those countries. So it's much riskier politically for Xi Jinping to do this, or for the Chinese government to do this. But I don't really see what other choices they have other than devaluing the yuan, which I think would be even more provocative.
So, George, finally, an unfair question, but a simple one. If roughly, I am told, 16% of Chinese exports are to the United States today, if this continues for a period of 2 years, 3 years, what will happen to that number? Will they start dealing with other countries more than they deal with us?
I think it'll be a two-sided affair, because I think a lot of American companies will and probably foreign European and Japanese companies too, and South Korean will be looking to evade or avoid some of the tariff pressures that come from doing all of their supply chain business within China. But China too, will probably will try to find other customers. But actually, there's nobody that's really as big as the United States, other than the EU, and the EU feels very similarly to all of these issues that the United States is raising, and so I think in a sense I think it's going to be very tough for China to find an external kind of escape route.